Hi, accounting students. Thank you so much for your patience. Friday and Monday are both planned absences. Today, however, is not. I had a kid with a fever, so they cannot go back to daycare until they're fever free for 24 hours, which leaves me here at 9:30, sending you an awesome screencast. Just for the record, you're my only class I'm creating one for, so obviously um, that's pretty sweet. No. What I wanted to do though is go over some thoughts about the test and walk through some of the mastery, and then you guys can decide via a poll I'm going to post on Schoology of when you want the test. More than likely, I'll be back tomorrow. They seem to be doing better right now. So, hope all is well. Hope you're enjoying the short week. I'm just have in front of you the general ledger from the mastery problem. Obviously, step one from the mastery is review of chapter 3, where we are putting everything in the journal. From here, then we're kind of separating out each transaction into its own individual ledger. So this is cash. There is a post, two posts for the month of February. Last day of February, the 28th. First one was our debit entry from the general journal. Therefore, we have a debit balance. Then a credit entry. We reduce our debit balance by our credit, and we're left with $13,794. The other entry for our general ledger that is posted as a total is sales. So I'm just going to scroll down to sales. There'll be just one entry on the same as the 28th. We have a credit of $7,640. Everything else is posted individually. So how it appears in the journal will be how it comes into the ledger. So looks like accounts receivable, Clara, we have two entries. One is where we sold services on an account. So she owes us $560. Because accounts receivable is a asset, it's a debit normal balance. So she owes $560 as a debit. Later that month on the 20th, she pays us back $300, leaving her with a new balance of $260. Moving down, it looks like in this example, we had 4 entries to supplies, all which were debit. So we all bought supplies, whether it was an account or for cash, every time we had a debit entry. So at the end of the month of February, we have a balance of $1,740 in supplies. Accounts payable, it would be our vendor. We purchased something from them on the 13th. Therefore, we credit. So we owe $480. And then we paid back on the 18th in the amount of $280. So we have a new balance of $200. Going forward, we have one entry for capital. So it looks like owner investment. Therefore, it's a credit. And so the owner put in $11,000 into the business. On the last day of the month, he drew out $1,000, which is a debit drawing normal balance. I already went through sales, and then I'll just show, I think it's just a couple expenses, but expenses are all going to be the same. It looks like on February 16th, we owed advertising expense in the amount of $286. So therefore, that account has a debit normal balance of $286. And then all the other expense lines are similar. We're just putting in a debit to the general journal, therefore a debit in the ledger and a debit normal balance account. So that is a quick overview of the mastery problem. I wanted to point out 2 things if we do decide to take the test on Wednesday. Obviously, there's advantages and disadvantages to either choice. The advantage of Wednesday is take it, kind of see where you're at, and we can move forward on Monday with Chapter 5 or retake that same test when you're pretty fresh with doing the homework. I noticed I have about 77% of you turning in the assignment. One section of the test is true-false. There is another multiple choice. There is not vocab this round. And then, like I said before, the classification of accounts. So this we've done in chapter 1, 2, 3, and 4, and we've reviewed it multiple times. I don't feel uncomfortable with you going through it, but like accounts payable, it's going to be a balance sheet classification and a liability Accounts receivable would be also balance sheet, but this time it's an asset. And then you just go through all the accounts and you classify if they're a balance sheet or an income statement, and then asset, liability, owner's equity, a revenue, or expense. After that, you're going to assign numbers to it. So that's where it'd be beneficial to have each of the assigned account numbers. So for assets, it's the 100s. For liabilities, the 200s. Owner's equity, the 300s. Revenue, 400s. And expenses are the 500s. And then we're also going to add in new accounts. So that is one section. The other one is going to be posting to the general ledger. It's exactly what we've been doing the whole chapter. It just looks a little bit different. So at first they ask you just to identify account number, what would go there. And then they'd have you post lines and then post totals. Obviously, I feel like you're ready to take it, but I always feel like that. And so I'm going to put a poll up underneath this screencast, and you can let me know what you think. So hope all is well and have a wonderful day.